Hello to all traders and welcome back to another market review brought to you by Orbex. So stocks were sliding yesterday as well as the indices as well as gold and silver after stumbling lower, gold falling over by $400 which we reported on last night. But is there a bit of a reprieve for the metal market and is now the time to enter? Well, we're looking at indices today because Microsoft dropped over 10%, its worst trading day since 2020, as well as a few other stocks posting their earnings season this week but not really getting the advantage that they want and the forecast that they want. So we're having a slide on the S&P and NASDAQ in yesterday's trading. The Dow is just keeping up propelled. Obviously it's got only 30 companies in it, so it's not affected as much as the other two, but it is holding on to some gains in the near term as well. And where next for the Federal Reserve? Apparently Donald Trump did say that he's going to announce a new Fed chair today. So Jerome Powell is off the hot seat for now and he's probably not going to get back in it after the big falling out that he had last year. So let's just get straight onto the charts. And for me, we're looking at NASDAQ at the moment because if the price does propel lower, then the 25,000 psychological area will be the firm support. We had that spike in yesterday's trading and it fell towards the mid 25,000. Sharply moving higher. Now we are trading more towards 26 than 25. For bulls, that's a lot, very fortunate. But we're just seeing this long-term double top here, just above 26,000. That has been failed to crack time and time again. So that's for us a firm resistance at that particular level. And we're just waiting to see now. Obviously, earnings season does take a big chunk of news from stocks and indices. So if you are trading the Dow or the S&P or the NASDAQ or any big European market, we are just obviously looking at the earnings to see what's going to happen. Even though a company can actually have a big earnings report, it's the forecasts as well as the Fed that's been controlling the market for quite some time. So this is the bottoms and tops that we're looking at the moment. S&P, pretty much a similar picture. That hasn't really had a long-term double top because we had record highs recently after cracking this particular area here just below 7,000 and then testing that zone as well. So 7,000 being a very psychological limit and resistance there. Again, pretty much like the NASDAQ, we had this huge spike to the downside. The candlestick had a massive wick on the bottom of it and we're now just seeing prices recover nicely, but the shock waves are still in the market. We're just waiting to see now where we're going to go next from here. The Dow, similar story. We are seeing a bit more of a bearish transition on the Dow, trying to get out of this bearish channel here. Really subdued at the moment, but yeah, earnings season, like I said, taking its toll on a lot of indices and a lot of stocks as well. So we'll just wait and see where's the next big momentum going from now. As I said, gold sliding $400, silver sliding as well. Is now the time to enter the market, not just the metal market, but the indices market as well, because that can be very, very fortunate for a lot of traders jumping on these opportunities. Are we going to see record highs again, or is the correction firmly in place and a deeper correction as well, most worryingly, as we head into 2026? Well, that's all for me today. Thank you very much for joining me. We'll look again next time around at the big movers and shakers of the market, and we'll keep you posted live on our Telegram channel for any big news updates. So thank you very much for joining me, and we'll speak again next time around. Bye for now.